Hmm. So just understanding the importance of income, capital, and credit in the process of getting real estate, in how income will help you get your approvals and so on, reporting taxable income. I know in many times, in especially when we have business people, or if you have a side hustle, you're trying to not do that, so we talk a little bit about that. um, some of the things you need to do to prepare for closing, down payments and deposits. We spoke a lot about credit this week, so we will skim through that, but it is a huge part of getting the approvals you need. And even just working with others who may be wanting to partner with you, having good credit is just a credibility, and just understanding the whole process and how it's interconnected to help you succeed with real estate. Few things matter more with money and investing than understanding your own time horizon and not being persuaded by the actions and behaviors of people playing different games than yours. So this is just saying that, once you decide on what you want and what your plan is, you need to focus on your path and your journey. Don't worry about what, Sally and Jane and um, all the others out there are doing. You focus on your journey so that you can succeed and achieve that success you want to set for yourself. Okay, so when banks and financing institutions are looking, they're looking for proof of assets and income. They're looking for good credit. They're looking for employment usually. Definitely, if you have your own business, they'll look to verify the income from your business. So they're looking for you, like just how established is your business. But I can tell you, when it comes to starting out in real estate, generally financing institutions are more friendly to and in um, enable you as a residential or person buying property as your primary residence, or just maybe one other property. But as you get into more properties and investments, or you're trying to do it as a business, it can be harder, and they're looking for identification, definitely. um, they're looking for overall score, positive credit, low debts or manageable debts. So you don't have to have no debt at all, but definitely your income has to be able to cover the debts that you have. And if you're going for any sort of lending, it would be advisable for you to start out by paying down any debts you have as much as possible, so that your, as we call it, your debt servicing is manageable. Steady income. So if you're thinking about going for a mortgage or borrowing, you want to make sure that you're don't change jobs if you don't have to. If you have to, you have to. We want everybody to be happy, but if you don't have to change jobs in the moment or before you head into getting an approval, don't do that. And strong character. So things like, maybe criminal histories or any fraud or anything like that, they definitely frown on that, and you'll have a hard time. And that usually shows itself in credit, somewhere in credit. So uh, in terms of debt to income, they're looking at your monthly debts versus your monthly income, and they find a ratio that is comfortable for lenders is anywhere from 28 to 43%. You can do those rough calculations for yourself, or detailed calculations if you know, and you practice very detailed budgeting. You may know, okay, I pay $100 to my credit card every month. I make $1,000. My debt to income is XYZ. And so, you can do those calculations. But in general, you want to go into these. If you're at 80%, you're maybe too high and you're going to have a problem. They're going to ask you to pay off a lot of debt. These are things that you can start to look at your own current state to start to plan and see where you're at, to then know how you can improve for going for lending. Um, so, sources of income. So, what we find is, don't limit how much you earn by the job you hold. So Robert Kiyosaki, Andrea loves this book and she always mentions it to me. The cash flow.
Yeah, I think that you've known and heard of Robert Kiyosaki with respect to Rich Dad Poor Dad. He's written that version for adults and teens and children, but he also has a very well-known book referred to as Cash Flow Quadrant. And I love the graphic organizer here that we put into this presentation. This is his by in many ways. He's using this And he built a lot of his wealth in real estate, like his grandma and family before him, right? His rich dad, who was actually not his personal father, and his poor father, you know. So, I mean, I love his story. I love this. Really, all that this is saying is 95% of people and if you're looking at it the same way I am, on the side of the E and S, right? That side of the quadrant, 95% of people actually, you know, are here in this, in that side. They're either an employee or they're self-employed, compared to 5%. And I know you've heard of the 5% and 1% in different respects. And on the other side of the quadrant, where you have the BNI, the business owner investor, you have 5% of individuals. Well, ultimately, for me, what I understand about this is I'd like to be on to the side with a BNI where I can become the 5%, because what happens is the 5% tends to have the majority of the wealth compared to the 95% on the other side. And as well, on the 5% side, I'm working a lot less. So I really like the concept of being a business owner, being an investor. A business owner is not someone who's self-employed. Self-employed means that you're still working. It usually probably means that you're working more than you did when you had your own, when you had a job that you went to and you had a 9 to 5 and you can clock in and out. The self-employed, typically they are their job, and so they invest a lot of time, but oftentimes they're trading that for, you know, the opportunity to potentially get to, hopefully, the business owner investor side, where they can generate income that is working while they're sleeping, while they're traveling, while they're living the life that they worked for. And to me, that's what I would have shared, Kemba. I'm not sure. That's what the cash flow quadrant is teaching you, to move from the one side, the ES, to the BI.
And real estate is a really good tool to bring you into that category of I, where you're
Mhm.
now an investor because you purchased a property, even if it's a property you live in, and you purchase a one bedroom plus den property, and you can rent out that den sometimes. You're now an investor because you're earning income that you're getting fairly passively. You know, you move on from that, you rent out that whole unit, now you're renting the whole thing, and it's more, and it's building and growing from there. You buy a home, you rent the basement, you leave that home, you rent the upper floor. There's just progression of it, and that builds and builds and builds for you. There's
And
different.
you spoke of passive investments, Kemba, too. And when I think of investment, stuff that I don't have to do any real work in terms of, once I've got the capital, so I own a home, I have a lot of equity in it, I can take some of that equity out, stick it away in these, you know, REITs and mix, you know, like mortgage investments or wherever, where I'm not necessarily managing and tenanting and doing all the work that is involved in an active real estate investment, and you can still be making great income. So that's the concept too. You can buy a property that will eventually build a large enough access to capital that you can now take and invest either in a business by buying some form of a business that you employ people that work for you, or you can invest it in assets like real estate that works for you, whether you're working it or not.
Absolutely. So how do you prove income? So in many cases, we're employed. It's really super easy. Your employer gives you a paycheck, you get a statement, and that is your sole and primary way of tracking income, because it's all documented, it's all tracked, and your taxes and everything are all deducted from that. It's all clear. So from a
So wouldn't you say that we prove income essentially by our reporting to CRA, Canada Revenue Agency, if you're a Canadian, through your notice of assessment, and right? Because I mean, you can be self-employed, you can be employed, but if you're not reporting those sources to CRA and it's documented, then it's not income. Not
It's
that's
it
provable.
is it's income, but what it does is that it's not income that you can use to help build the wealth that you're looking for. So in many cases, so you know, maybe business owners say, or people who earn income that is not documented or not reported. Granted, you may have more money in your pocket because the cash is, you're not paying it out in taxes. But when it comes to then the next step of you wanting to buy a home, or you want to buy an asset that will generate income, you sometimes have to leverage to do that, meaning you have to get loans, you have to get borrowing to do that. And because you haven't reported any of that income, it holds you back from actually moving ahead to do that. So there is a price to pay. You do have to pay the taxes on it, but it is really important that you track and you report that income so that you can use it. So, and we encourage, especially when you're employed, to try to find other sources of income that will help boost your income. We know in general, and we do a presentation on generational wealth in the year, and we know that in our community, our paycheck is less in general than others in the community. And so we encourage everyone to find other ways to earn income. And this is not an exhaustive list. This is just some examples of maybe some ways you can earn income outside of your regular day job. Start a business, maybe start a blog. People are very interested. There's ways to make money online. Market research sometimes can pay some money on the side. There's a program called Fiverr. If you have any type of skill, you can throw that skill up there, and people may call on you to help you earn some money. Cashback shopping apps, sell a product online, automate your investing. That's a way to earn money. Affiliate marketing, sell services, and as I said, Fiverr is a freelance job site. So I don't know if any of you have any other creative ways not mentioned here.
Well, maybe as you continue, Kemba, if you have a different way of earning income, type it in the chat.
Share. This is what the community is about. It's about sharing to understand, what are other people doing. There's
Many people have side hustles or talents that they utilize to generate income.
and if you
wrote a
go
book and you're getting royalties on it, or you produce something.
Yeah, if you haven't done anything yet in terms of side hustle and it's your primary job, that's okay. If you were to do one, what do you think you'd be interested in doing? Maybe you can throw that up there. If you haven't done one yet, what is something you'd be interested in building as a side hustle for yourself to earn income? We won't wait for you, but go ahead, throw it in there when you can. Yeah, so I mentioned this already. When you're reporting your income, it does help you to boost your mortgage approval, and so we have to consider that. How do we report more of that income if we want to get that lending that is out there that will help us to build the wealth that we want? So, what are your sources of earned income? What are other ways you can generate income? Share your experiences in qualifying for a loan. If you haven't already qualified for a mortgage, maybe you've qualified for a loan or a line of credit. And what was that experience like? Um, one of the things I've learned is that we are anyways, we'll go into that later. I'm gonna move on to capital. I can start with stories all day. So what is capital? Capital is anything that confers value to its owner. How easily capital can be turned into cash is the liquidity of that capital. So cash is cash, cash is king. We love to have cash. We don't always have cash, but we have other things like stocks, we have retirement savings, we have property. Some of us have property and some of us are here to see how we can get property, but property is a source of capital. Business or assets are all sources of capital. So when you're thinking about going forth to get a mortgage, the bank also looks at how much of a deposit you have, but they also look at what sort of other resources do you have potentially, like all these other forms of capital, to help you become a more viable risk, so or lesser risk for them. So any sorts of capital, if you haven't started a retirement savings yet, that's something you could do. That is also looked at to help you with your mortgaging. Any stocks you own, that also goes into what your net worth is, and people look at that. Home staging, nice.
Yeah, Natasha said that, and I thought, yeah, I like that. I love anything to do with real estate, especially beautifying the place, right? So
Andrea, you can team up with Natasha. That's something.
yeah, we can do it together, Natasha.
Um, And Natasha, you know what? We'd love to see some of your stuff. So definitely share it
No,
with us.
that's what she would love to do. That's, you
Oh,
asked for options that someone would, do if they had a side hustle, right?
n-
I don't think you're currently doing that, Natasha. It's something you would love to do.
Correct. I'm not currently doing that.
Yes. It's a future. It's the future.
mm-hmm. So the percentage of the sale price of a property is required to secure a down payment. Higher the down payment, the lower the amount of the mortgage. Yes. Know your capital needs. Get a mortgage approval. This will help to determine the next step in your plan. So a lot of the time we advise everyone who's thinking about investing in real estate, even if you're not ready with a deposit yet, sometimes going to see what type of approval you can get can give you an idea and an understanding of your starting point. So granted, you can tell the professionals, the broker, the bank you're looking at to say, hey, I'm working on my deposit, but I just need to know, how much further with income, what is it you're looking for, what do you need? It's a learning experience for you and a marker for yourself to know what else do you need to do to get to the next step. And maybe some of the requirements that bank or that institution may be looking for that you need to prepare for. Some of the stuff we're telling you is the general requirements. Sometimes when you go to an institution, they may give you some more information on what they specifically require. So, for example, when you're thinking of what you may need to put together for an investment, so 5% down on a $300,000 mortgage, which is not maybe in this province, but there are some places.
It's in this province, just not in the GTA.
Yes, we actually spoke to someone in Cornwall, right, Andrea, recently, who said there's some properties out there that are still in the 300s or less.
And
Um,
yeah, our last
so,
one.
so there's places in Ontario you can still go and get a property for that much, but just not maybe close to home. And we talk about how you can invest in properties that are not right there close to home. So here you would need 15,000 for your down payment, you'd need 12,000 for your closing, and you'd need 15,000 for maybe initial repairs. Sometimes when a property is not that expensive, it means that it needs some work. And so if you can go in and see, hey, this is what I need. Some of the programs we're going to talk about later on help you with the one and two. So the first 5% and the closing costs, you can help get some financing and funding for that. But you might have to come up with the repair money yourself. But there's ways to do that as well. One of the things we encourage everyone to do is implement a monthly budget, track and reduce your expenses, set up automatic savings tools, and optimize your spending. So, I know today's Black Friday, so it's an opportune time to talk about it, but optimizing your spending means maybe staying away from the Black Friday sales as much as they are fantastic. But do you really need it? Ask yourself that question. Alternatives to saving for down payment, so municipal and government programs, joint ventures, equity, so debt financing or financing your down payment, which is what Sharon did. Make sure you're careful when you do that. Retirement income. So a lot of people don't realize they can tap into their RSPs to be able to buy a home and private money or hard money. So many times there is lenders who will lend you at a very much higher rate than what the bank will give you, and you can borrow for that money to be able to buy the property that you want.
And some of these we'll cover further in the course itself over the next 2 weekends so that you will get more information on them.
Mhm. There's risks and returns for everything, so we'll talk about how those things impact. So, in terms of that um, in terms of that 4% closing cost, what is that included? How is that 4% of your purchase? Well, it includes land transfer tax, legal fees, title insurance, mortgage default insurance. Whenever you're putting down less than 20%, there is an insurance requirement for that. There's sales tax if you're buying a brand new property. You have to have things like a home inspection just so the bank is and you are assured whatever you're really taking on, the home inspection will help you do that. We'll talk more about some of the things you should do for that home inspection. Appraisal, which is just basically determining the value of the property and how much the bank is willing to lend you for that and adjustments. So especially when it comes to buying new condos and new brand new construction, there are some fees and bills that come up. And when, what has the seller paid for versus what you have to pay for and so on. So there's adjustments that have to be made. And we usually allocate and plan for about 4% of the purchase price that will go to all these things. I don't think we won't go into too much of these ones, but this is a sample of a closing document, which you can see it's long and detailed, but there are a lot of expenses that go into closing on a property. So
Yeah, and I think this was my condo closing last year, so it was quite hefty. Some of it was like, what? I can't believe this, right? It was absolutely more money for my closing costs than my first purchase ever with closing costs and down payment. So, but the HST, I didn't, and you won't pay if it's your principal residence. That is amounts that will be paid and covered. Uh, Typically, if you're buying a new property, it's covered by the builder. So that 24,000 savings, yay, ching, I saved, yes. But it's very expensive to close. I think I paid a little bit, I think it was close to 55,000 on that condo closing last year. So Toronto's expensive.
it's $51,870.
No, it was more than that, because if you take into consideration the
Oh,
penalty that they,
yes, that penalty came up out of nowhere.
yeah.
Yes, true.
The
So
penalty was not factored in there at the time, and absolutely it's very expensive to close, with the land transfer tax being one of the bigger amounts in this 50 odd thousand.
yeah. So just these are things to be prepared for, but at the same time, the value is there because I think this property is worth more than what it was purchased for, even a year later.
Absolutely.
Hmm.
Still making money on it.
Yeah. And sometimes when you're closing and you're refinancing, lenders will ask for you to pay out certain things and clear up certain things just because at the time of refinance they want to see a fresh slate. And so that's part of moving into a property. And that's why we say when you're thinking about going into buying a home, especially for the first time, 2 years in advance of your plan or a year in advance of your plan, work on getting rid of debts and so on, so your profile looks as best as it can. Look at that. Credit is your superpower. We've been saying it for some time.
That's right. That's how it got the name. That's how we got the name on Tuesday.
Yes. So your credit score influences all aspects of your life. And it's a very powerful 3 digits. It is definitely important for you to manage and maintain a good credit score. It really can be a factor between you getting or not getting that loan, that rental, that anything, even sometimes a job you'll be looking at. It will impact all those factors. So it'll determine eligibility for even insurance sometimes. And it does also help you. One of the big factors is it does help you to save money because the better credit you have, the more favorable lenders will be to you, and they will lower your rates, give you more incentives because you are less of a risk. So the more risk you are, the more you pay. Just consider that. The more risk people think you are, is the more you'll pay. And over the course of a loan that you'll have for 25 years, that works out to be a lot of money. So you save in the long run. If your credit is good, you save a lot of money in the long run and in the short
You
run.
save, and you can also negotiate, because oftentimes the better you are as a potential client to the lender, the more you can ask for favors or to ask for things that work more in your favor.
Yeah. So for example, here, over the life of a mortgage, you're now between the rate of 3% and 6%. That's $150,000. That can buy a house in some places. A whole house. You're saving a whole house in some places. Or in the case of Toronto, you're maybe saving a down payment on a smaller house because that's where we're at right now. But you know, your monthly payments, so you have a little more opportunity for cash flow just because you have a better interest rate, and your overall payments over the life is a lot less. So just remember that credit definitely has an impact on those things. Um, so your credit score ranges from 3 to 900. How many people have checked their credit recently?
Or even after our session on Tuesday, at least check their credit. So I haven't seen any, type in and tell us in the chat. Jada did recommend that, or
Nice.
say that she does selling, recycling and selling online with as one of her side hustles. I also sell online. I'm forever trying to keep
Nice.
the things out of landfills and so, throwing things out. And so I tend to either offer it free online or at a small cost that people are willing to come and pick it up at my place.
Hmm.
So let's see, keep going, Kemba, because we are at 10,750.
So there are two scores. Make sure you're checking both. Um,
Two bureaus that create the
sorry.
score. Hopefully they're very close together, but sometimes they vary.
Yes, it's important that you check regularly. What we've seen is many times people check their score maybe weeks, months ago, and then, when it's time, crunch time, they don't have the score they expect because something creeped up and did something to it. So now we have apps like Borrowell and Credit Karma and what's the other one? There's another one out there, but they
Well, the
help.
bank apps, many bank apps also allow you, like if you're on online banking, you can see what your score is there too.
Yeah. Credit payment history, so that what determines your score, your payment history, your length of credit history, any current debts or credit that you have, frequency of new credit, how many times are you going for new credit, how much are you utilizing the credit that you do have, the types of mix of credit, i.e., meaning that you have a mortgage, you have a credit line, you have a loan, you have a credit card. So all those different things become your mix of credit that you have, and how many times you're getting inquiries on your credit. If you're having a whole lot of inquiries every time you have a hard check, it definitely dings your credit. So lenders are looking for your capacity to pay, your credit history, your character, your capital or your income, and the collateral that you have. So basically, the collateral is usually the home you're looking to purchase. If you're just looking for a loan, likely you won't have collateral. Or if you're looking for a loan and you already own a home, sometimes the lender will take that home as collateral. Um, so
Only two people have checked their credit. Oh, sorry, three.
maybe
Only three
everybody
on
else
the
is
call.
using.
No one else has. Oh, by the way, I just didn't type in. So I check it quite regularly too, because Borrowell updates me as well as my apps on my bank.
Yes, yes. It's
Oh,
important,
someone
right?
else says I have two. So great. Jenna said that she has as well. It's so important. I know for me, I'm forever getting fraudulent stuff on my bureaus. And
Mhm.
so it often takes a beating on my score.
Yes. So we won't go through the percentages. I kind of showed this the graphic, and so I think that's so one way of getting good, or many ways, here's the multiple ways of getting good credit. So paying your bills on time, keep low balances on credit cards, monitor your credit report to ensure that no mistakes, like we said, Borrowell, Credit Karma, some of them. Avoid too many credit inquiries in a short period of time. Absolutely, you can have, if you're looking for different things, you need something, you can have people check your credit, but if it's happening in like a condensed space of time, every time it happens, it dings your credit, it'll come back up, dings your credit, come back up. But if it's all in a short, it'll just ding, woo, right down. So that's harder to come back from. Protect your finances. So make sure that nobody has access to, Andrea said that, she's always dealing with that because her name, nobody, it's harder to be a Kemba because that's not a common name. It's easier to be an Andrea because how many Andreas have we met in the last little while, Andrea? Like maybe 10? We've met a
Mhm.
lot. So the name is more common, and that's sometimes where people are
And
able.
Williams, oh my goodness. It's like
Yeah.
everybody's name Williams.
Mhm. Okay. One of the things the banks are always doing is judging your capacity to repay. So gross debt service ratio. So they're saying overall, um, how are you able to pay? And that includes sometimes that includes just your the borrowing that you're looking for, and then your total, which includes other debts as well. The stability of your employment. So, for example,
Number of
have you been at
years
the
that you've
same,
been there
yeah,
long.
you've been at the same job for more than 2 years, and usually that's a safe number. They like 2 years at least in the job.
And
Um,
if you've changed jobs, because you mentioned change before, if you've changed jobs, but you stay in the same field, that is beneficial to you with the lenders as well. But if you're moving from one career or job to another that is totally unrelated and it doesn't give you that 2 year, it is more challenging with
mhm.
lenders.
So stability of concept compensation. So for example, somebody who has like a gig type role, and even if you've been doing the same work, but it's gig in that it pays you contract style work, versus somebody who has a regular paycheck all the time, and steady paycheck, it definitely affects. And then level of commitment or committed or discretionary expenses. So for example, if you have a line of credit where you can pay the minimum or you can pay a certain amount versus having a loan where you're committed to paying $500 every month, that changes how they see your capacity to repay. So those things impact your ability to get. Um, so we mentioned these already: ability to manage money, history of debt repayment, accumulated savings. So these are all things character on paper. So the bank doesn't know you. They don't know what nice a person you are, how honest you are. So everything we're talking about is their ability to judge your trustworthiness on paper. So it's really important that you look good on paper, I think sometimes. Um, your level of assets or the value of your assets, the value of your liabilities, liquidity of your assets, any prior debts, your ownership structure of your assets. So, for example, where that comes in is definitely when you start to own property. If you are going to own in a corporation versus own personally, the corporation is not going to show under you, so you may not you be maybe claiming income as like dividends, so it'll look like one type of income, but the assets are not under you, so you may have an easier time going into buying more property. The volatility of your asset values. So if you have a lot of Bitcoin, it's going to be like, woo, not so sure about that. But maybe if you have some blue chip stock, they know that that value should stay and be consistent. Geographic location of your assets. So, for example, if you own a lot of property in Toronto versus owning, say, in Sudbury, the value of your assets are going to be a lot different. Now, pulling it all together. So, uh, check and work on improving and protecting your credit score. Before you start shopping for property, get a pre-approval, determine your purchase amount. Do you need more income, or will your income be sufficient to purchase? And a realtor helps you identify areas to buy based on the amount of that pre-approval. So before you go start working with anyone, make sure that you are getting those things in place. Has anyone here already purchased property? Like, do you guys own already? If you want to raise your hand and say, yes, I own, or no, I don't own. We just want to get a gauge of how many people in the room have already done this process. Taylor, we see some clapping. You already an owner? It's okay to unmute. Oh, Taylor's. So, oh, let's see what the
Natasha and Taylor have indicated that they do own already.
next. Yeah, so it's a similar process when you're going to go into getting your next property. You want to definitely start looking at where your pre-approval will be and looking to get all those factors. And I mean, life happens, but we're just giving you how to best situate yourself for the next step. Um, have you started looking for any investment property at this point? Don't own Donnelly. Okay. Yes, awesome, awesome.
So Taylor's already shopping.
Mhm.
And yeah, Natasha hasn't decided to start shopping yet for an investment property.
Mhm.
Yeah, so hopefully this course will help you gain the information and confidence and knowledge that you need to embark on that and begin, shopping to buy.
Mhm.
If it's your first, or as we've said earlier, your next in terms of owning something additionally to your principal residence. So here are two, we will share with you, I believe, too, some information from Mindset in terms of books that are great recommended reads. But here are some good reads to support, income, capital, and he doesn't speak a lot to credit. We have spoken to that and it indicated to you how important that is. But in these two reads, he does speak quite a bit to the other two areas that we focus on here.
Mhm.
And so there are two great reads for yourself. Possibly, if you're not able to get to the, written version. I remember in the library that they had a lot of audio versions of, books like Rich Dad Poor Dad.
Yeah, Taylor just said she just finished reading Rich Dad Poor Dad today. You must be energized, Taylor. You must be energized from that.
Hence, I guess, Taylor, why you've already started shopping, right? You've already started looking at investment properties.
Good for you. Good for you. Um, and so that's the thing, Taylor. I think then if you've done that read, you're already shopping. Have you done your pre-approval yet? We're asking Taylor all these.
Okay. So in this I love Robert Kiyosaki's view. It's the only way really to become wealthy is by having your money work for you. So rather than you working, you're putting your money to work, and that's what investing your money in real estate will do, whether it's your first property first and then your next after. And as we said, you can do it both passively and actively by owning. Did Taylor give us an idea of whether she is? I mean, and anyone else. I
Yes.
mean, I know that some of you are searching and probing, realtor.ca or other similar websites for properties, because you must know that it's going to be challenging in the GTA, but absolutely other parts of the province has opportunities, or the country.
Yeah. And
So Jada's working on preparing herself financially, because I do think that that is obviously the foundation and the initial steps that you have to make. And it's the down payment and the 90 days history that the bank is challenging. So we all have to show that. I just received from one of my institutions this week. I wanted to try and move a property into a corporation, and of course they're not even just asking for 90 days. They want 6 months worth of history. So absolutely they have, and they made it clear that these are some of the things that we're asking you for now, Andrea, but by the way, we can absolutely ask you for more as we go through the process. So the banks have become very, very, very focused on gathering more and more information. And so 90 days of bank history is sounding pretty standard now, Kemba, is what I'm learning, because in this process, this bank has asked me for 6 months worth of
so
history.
I
Hmm?
can tell you as a previous banker, dealing with all the AML issues and so on, I know there's a reason why they do it, but it doesn't feel good. I was trying to do an investment actually this week, and I transferred money from one bank to another. And I went into the bank and said, "Hey, I'd like to do XYZ with my money." And they were like, the money hasn't been in there long enough. We don't like this. I literally had to go home, grab my laptop, bring it back to the bank, show them the path the money came from, where it came from. I mean, if it wasn't for the fact that I know what I want to do, I would have gotten very frustrated and maybe left. But if I had left, guess what? The bank doesn't care because my transaction is not done. So sometimes we have to work with the bank and what they want so that we can get what we want. That's how I see it. It's not always that it makes us happy. It's not always that it's easy, or and that's why we talk a lot about mindset and challenges. If I had left that bank in a huff and been like, screw you guys. Why are you making it so hard for me? It's my
It's
money.
my money.
Andrea knows the term already. And it does feel like that. It's my money, you
It's
know?
my money.
But
I only loaned it to you for a short period of time and I can do whatever I want with it after.
yeah,
But they
so
act like it's theirs.
well, and understanding that, the banks deal with a lot of fraud, and the banks deal with a lot of, there's a reasons why they want to see the path of the money, in this with world of terrorist financing and money laundering and all that stuff. They're always watching where the money is going and coming from to ensure that, they're meeting their reporting requirements, but also making sure that it's safe money, and it's when you have it and you've earned it, you always feel like, wow, it's my money. Give it to me. So,
Oh, they
um,
always, I don't know that the tellers need to know my business most of the times, but they always want to know where it came from, or, oh, is this a this, or is it a that? And I'm like, does it matter? I don't ever say it like that because I don't want to be rude. I'm like, do I have to stipulate, anything specific? But they
mhm.
usually, I agree with you, Kemba, because we are in I'm in the financial services field too, and I've been in it for a long time, and it is just about, their reporting requirements as well, right? And all the fraud that takes place.
Mhm. So guys, if we're gonna not start on tomorrow's session just yet. We want to just find out where you guys are at. If you have any questions about the session, we kind of went through some of the mindset really quickly, and we also went through some of this quickly. Do you have any questions related to either how do you get the right mindset, or how do you get the in terms of working with your capital, your income, and your credit to get an approval? And I'll follow that up. Not everyone wants to jump in on
Well,
the.
or even sharing an experience. Like as I said to you, stories, knowing and hearing what others have experienced can also prepare you or help you as you embark on, trying to get approved, or, buying your first or buying your next.
Sorry, Jenna, you said my second question is what you had questions about in terms of getting your approval and getting the capital and income that you're looking for. Yes. Yeah, so I think then definitely, looking at some of the programs that are out there that you could potentially apply for would be helpful. Um, we're going to maybe go back to the agenda and look at some of the other items that we're going
Yeah,
to
I
talk.
think what we can speak to, because you covered it all at the beginning, but then what our next steps were is what we're going to cover tomorrow, and also the following weekend. For some of you who are attending tonight for the Free Friday, you might want to consider staying on or and joining us for the next 3 days of the course. So Jada is speaking of her experience here being a bank teller. I do understand why people get frustrated with when the bank makes it hard to get your own money, but I promise being kind to the people you deal with at the bank can help a lot, because they're willing to work with you or offer you support. Yeah,
Mhm.
sometimes I just get annoyed though. Sometimes I just don't have time and I just give me my money.
Yeah. So tonight we're gonna ask you to take a look at these are the activities you can do on your own. Make sure you're checking your credit. Some people have already done that. If you haven't, please take a look at your credit. Make sure
It's
that you're
free, right? It's free to go on these sites and get the scores. It's free to, in writing, request the report. Because having the score is great, but it's really important that you actually verify what's on the report beyond the score so that you can see if there's if it's all legitimate